The Fed just held rates for the sixth straight meeting. September odds now say the next move is up, not down. Your mortgage heard it before you did. Three stories moved against your money. The Fed holding rates, which means the September hikes, the odds are now at 70%. SoFi posted record revenue and the stock drops 10% anyway. And then number three, the NCAA suspends a player over a $400 fight. Let's get into this news.
Every headline on Wednesday said the Federal Reserve did nothing. Look at the 30-year Treasury bond instead. It closed at its highest yield since 2007 that same afternoon. The Fed held still, and the part of the market that actually sets your mortgage moved anyway. Three stories this week, and all three are about who pays for that. Let's get into it. The Fed left its benchmark rate at 3.5 to 3.75%, the fifth straight meeting with no change. The vote was 9-3. Beth Hammack of Cleveland, Neil Kashkari of Minneapolis, and Lori Logan of Dallas all voted to raise rates instead. And that is the most dissents pushing in one direction since September of 2016. Chair Kevin Warsh was asked about September and gave nothing. The statement carried no forward guidance and no explanation of what would trigger a move. What he offered was that he had asked for a good family fight and he got one. That is the whole signal. So the bond market answered for him. The 30-year yield jumped to 5.21%, the highest since 2007. The 10-year rose. The 2-year actually fell. Read that shape, because it is the market saying the Fed is holding short-term rates too low today and someone pays for it in inflation later. Your mortgage is not priced off the number the Fed sets. It is priced off the long end of that curve, and the long end just went to a 2007 high while the Fed sat still. The reason is at the pump. Brent crude crossed $100 a barrel for the first time since late May. On the fighting between the United States and Iran, oil finished July up more than 20%, and gas hit $4 a gallon, which brings the second story, and this one is a confession. SoFi, the online bank, reported record revenue on the same day, $1.2 billion, up more than 40%. Record members, record loan originations at $14.8 billion. It raised its revenue outlook for the year. The stock fell 10% anyway. It fell because management would not raise one number, its profit guidance. And then the chief executive said on camera exactly why.
Hey, real quick, just to jump in, if you want to learn more about mortgages, you want to learn how to save a ton of money, I'm talking thousands of dollars, when you buy a home, when you use a mortgage, or you want to save tens of thousands of dollars over the life of your mortgage, links down below to the Mortgage Master course. There's nothing like it. This should be taught in college, but it isn't. And I decided to change that. So links down below. Now let's get back to the video.
Anthony Noto explained that the bank had moved its own expectations to 2 rate hikes this year, when it started the year expecting 2 cuts. The Fed chair would not tell you where September goes. A lender holding $45 billion in deposits that just wrote a record book of loans told you anyway. When the people lending you money reprice for hikes, the wait for cuts plan is already finished, whatever gets said at the microphone. Third story, and it is small on purpose. $427.48. That is what an agent paid for a flight for Arian Carter, a linebacker at Tennessee, back in December when he was chasing the NFL draft. He got hurt in training, withdrew before the deadline, cut the agent loose inside a month, and paid the $427 back in January. The NCAA suspended him 3 games anyway. Tennessee appealed and got it down to 2, which is a quarter of his regular season. They classify it a level 3 violation, the lowest tier they have. And in that same sport, in that same season, thousands of players legally carry agents for endorsement money. The rule that landed on him is that this agent was an NFL agent. Billions of dollars moved through college football on an ordinary Tuesday. $427, repaid in full, cost this young man 2 games. So, here is where the 2 roads go. Either the long end comes back down, which needs the oil story to end and inflation to cool, and the people sitting on a refinance finally get a window. Or the 30-year stays where it is, and every loan you sign for the rest of this cycle gets priced off a 2007 number, while the headlines keep telling you the Fed did nothing. The institution's already picked. A bond desk repriced in an afternoon, a lender repriced in a quarter, and neither of them waited for permission. The only people still budgeting for a cut are the households nobody asked. The Fed protects the system. The paperwork is how you protect yourself. And with that, Economic Ninja is out.